Okay, so my cash secured put on PayPal really went bad. I mean, it was a very bad decision that I did, and I want you guys to avoid that mistake what I did. So in this video, we are going to discuss what mistakes I did, why it happened, and how you can avoid it. So if you want to know more, then stick around. We are going to discuss everything in detail. Hello guys, I'm Abhi and welcome to my YouTube channel. Let's discuss the topic of today, which is what really happened with my PayPal position and what is my plan going forward and how you can specifically avoid this situation. So we're going to discuss it point wise. On first we'll check what happened, what are the reasons behind it, then how you can avoid it, and what is my plan going forward. So this is what happened. Okay, let's go to my Robinhood. Right, this is the PayPal. If I go to my orders, you can see here, right? So I opened this position, I think on submitted on 725, right? So this is the position that I opened, and then I received $220 premium for this. PayPal did well in their earnings. Like you can see that their the earnings were good. Like they did have a good revenue. They did beat on or they did meet or rather the earnings per share, right? And earnings were not bad, but then right after the earnings the stock dropped significantly, and my position was like I was sure to get assigned, and that's what happened. And right after it assigned, right, you can see, right, the losses that I have right now is almost more than $1,000, right? So because it assigned and then it dropped, I got assigned at 72 and then it dropped significantly, like almost $10 from there, right? So that's what happened. Now I'm in a situation that I cannot really sell covered call against it because it's so down deep in the money. Before we go on my what I'm going to do or how we can avoid it, let's understand the reasons behind it on why it happened. Okay, so there are three main reasons why it happened. Okay, first is a premium grade. This is the number one reason why, when I, in a hindsight, when I think of it, right, this is why it happened. Because I was so much into the premium that I was getting, which was almost more than 5 to 8%, right? I was getting $220 premium on the $7,200 capital. That is like a very good premium for a week, right? So that's what got me into this position. So that is the number one reason why I got into it. The second was the earnings, right? Because it was a earnings week, the implied volatility was really high, and that's why the premium was high, right? So the main reason why it happened was because I played the earnings. The third thing why it happened was I did not do the technical analysis on PayPal. I did it, but it was not up to the mark, or I did miss out some of the points, which I'm going to discuss right now, right? So let's go to the chart of PayPal, right? So this was my thesis. Okay, so let's understand this. So this was my thesis. If you see, right, all this while right here, okay, all this point here, if you see, right, this so this area, right, if you see this area was, I thought it was a good amount of support, and it had bounced before in during early this year. It bounced couple of times, multiple times rather, from this support line, and then I was thinking that it would again bounce back from here. Earnings were not too bad, so I was expecting it to bounce off of this line. So that's why I just went little aggressive on it to set up a $72 strike, even though I believe it was hovering around 75 during when I opened the position. So I went with the 72. So that was one mistake that I did. I should have accounted for a little bit of room. I should have given at least 10 to 20% I should have given here, right? So that was the third thing that happened. Now let's go back and look at how you can avoid this situation, right? There are multiple ways which you could have avoided it even before it happened. and then we will discuss if it has happened to you, how you can do it, or what is my plan, right? On the avoid list, the number one thing, irrespective of how much premium you are getting, always avoid earnings at all costs. Do not play into earnings. If you are in a wheel strategy, or if you are in cash secured put, covered call, any of these strategies, right? There are separate options strategies to play earnings around, which you can play with a small percentage of your portfolio. But for the larger point, right, in your portfolio where you are doing a wheel or all the other strategies, do not play earnings at all. This is the number one reason, like I played the earnings. Do not do it. The second thing is respecting the delta. Okay, so delta is very important when you open the position. Sometimes you get blindsided because of the implied volatility. The delta does not make that much a difference when you look at the opening positions, right? So delta, you have to choose a delta you are comfortable with. Give some room on the delta. Go for like maybe 0.15 or zero point 0.2. That's like a safe zone, at least in, in a normal case, not in a earnings case, but even in a normal scenario, just go with like something less than zero point 0.2, so that you have a room. Even if stock drops, right, you will have a room to give it some time to come back up. So that was the second thing. I went too aggressive on the delta. The third thing is like I showed, right, the technical analysis. I did it, but I did not again give much room. I went too aggressive on it. So when you do a technical analysis, you have to see that you get a good support line established, which was there for PayPal. There was a good support around $70, but I went aggressive and did sold a put around 72, right? So that was the mistake that I did. Give some room. If you think that 72 is a good strong support, then go a point or 2 point below that. So that would help. So these three are basically what you can do to avoid getting into the situation at the first place, right? So that you don't avoid getting into this situation. Now, this thing is, let's say you have opened the position. The first thing is you should not open this position. Now, let's say you open the position. Now, what to do, right? So roll out for credit. This is the another thing that I did not try to do in case of like PayPal, right? I could have tried to kind of roll it out. So when you sell a put, right, I could have tried to roll it out to September for a credit. Like I got I think I was in minus of like $400 bucks, so I could have gone somewhere here and find out like okay, if I opened 72, let me go and see what is less, how much, like let's say if I roll it down to 67 here, right? So I'm still, I would be able to roll it out for a credit. So that's the another thing you can adjust the position for. So if you had paid 220 already, if your position is down 400, look for something that you can like make still roll out for some credit, right? So if you're, let's say you are down for 400 around, look for something more than that, so that you roll down your position, but still you do it with a credit. So that another thing that you can do if you have already opened the position. So these are the things that you can do to avoid. Okay, so now that we understand what really went wrong with PayPal, how you can avoid it, what were the reasons, I want to discuss quickly on what is my personal plan on how I am going to kind of save this position from going totally wrong against me, right? So what are my options in this case? Or if any of you are in a similar situation, what you can do to make this losing position not exactly turn it around as a win, but at least you mitigate slowly, so that you are not in you come to a positive return in overall things, right? By the way, guys, if you have liked the video so far, please give a thumbs up and do subscribe. That will help a lot and motivate me to make more videos like this. Okay, so there are two things what I am planning to do. The first is a dollar cost average. So like in my PayPal position that you see, right? It's right now, if I look at my position holding here, so I was assigned at 72 average cost, right? That's my average cost. So my first goal would be to bring down this average cost, right? So I want to bring this cost down, so that right now if I see here, it's going for 61, almost like $10, right? So I cannot make it up the whole thing at one go, but my plan is that week over week, I'll try to reduce this average cost to at least bring down to a level so that I can start getting good premium on if I go for the covered call scenario, right? The second thing what I am thinking is of doing it, I will wait. Okay, I will in the meantime, like I said, I'll do the dollar cost average and then I'll wait for some weeks. There is a hope that there's another support level that PayPal has. So if I go to the PayPal chart, right, I can see that it has bounced back before from this level. So there is a chance again that it may bounce back, and if it bounces back, I think I would be in a much better position that I am in right now. Then once we kind of do the dollar cost average, and if the stock also moves in our direction, right, the final thing that you can do is, or what my plan is to do, is covered call, right? That's the best thing that you can do on when you are kind of a bag holding a stock because of a bad cash secured puts, right? So you start selling the covered call. I would not suggest you to sell covered call below your average cost that you have paid to get into the stock. But in if it goes really down, right now it's in not in that bad situation. If it has really gone down, you can try to sell it below your cost basis. But one thing that you have to remember in that case, that you have to actively manage that position, right? You cannot leave it even for a day. You have to keep checking and kind of adjust, roll it out, roll it back up, and try to make some money out of the covered call so that your average cost basis keeps going down, because that way you would be in a position to sell a covered call out of the money. So that is what my plan, guys. Right now I am pretty down on this position, but I am hoping that with the dollar cost average and the covered call and little bit of the market was also last week it was pretty bad compared to the run that we were seeing. So I'm hoping that if we get little bit of push in the stock will move up, and then I'll dollar cost average, and we would make this situation better. Okay, guys, so that was about it. If you want me to make another video about this position on how I manage it or what really happens with it, then please put a comment below and I will definitely make that video for you. Okay, so that was it. Happy investing, guys. I'll talk to you in my next video. Bye bye.